Good morning, everyone, and welcome to Weekly Profit Talk. Every single week, we talk about the things that affect the bottom line of your medical practice. And quite often, we talk about things that kind of cross over into other small businesses. So you may find something fun and informing out of this, even if you don't happen to be a doctor running your own private practice. But let's go ahead and get started. This week's topic is calculate your quarter three estimated tax payments right. And this is something that can certainly benefit anybody out there because, and by anybody, I mean anybody that is a small business entrepreneur that receives their money from self-employment as opposed to a W-2 wage. W-2 wage earners, of course, make their money by being paid by an employer who withholds their FICA tax as well as their federal and state income tax. And they don't have to think about taxes until they file for them next year. But in the case of we entrepreneurs, we need to make four payments a year. The third payment period is upon us, and the deadline is next Monday, September the 15th. So we've got 5 days to go. And we're going to give you three steps to doing this correctly. So let's go ahead and we'll bring up the visual aids. So let's see. All right, and thank you. Here we are. So step one, calculate your year-to-date income. Now, there is no better method than simply having a good profit and loss statement from your professional accounting software. And if you are a medical practitioner and even if you're only in your first year in practice, you should certainly be running your revenues and expenses through some kind of software. You don't have any idea how well your practice is doing if it doesn't have a scoreboard. And the scoreboard is your financial record. So I state this here, it assumes you're using reliable tax software. You definitely should be. Honestly, though I'm not the biggest fan of Intuit, we happen to be using QuickBooks Online almost exclusively for all our clients simply because they still have good, clean reporting and the convenience of being able to attach methods of payments such as bank accounts and credit cards in a direct feed. So this or something like it, there are other reputable folks out there. The QBO just happens to be where most people go. And for that reason, we're actually a QuickBooks Online accountant partner. So what you need to know is your total practice revenue through the 31st of August. That gives you an 8-month picture of what your finances are. And that includes all your business expenses. Equipment purchases and depreciation is important, especially if you've got anything that's been put into service after inauguration day of this year. From January 20th, 2025 to present, any asset that you put into service, if you meet all the other income qualifications, actually qualifies once again for 100% bonus depreciation. So this certainly needs to make its way into your calculation. And of course, development, continuing education costs. One of the things I didn't write down here is your staffing. It's huge and probably your biggest expense. So if you're guessing at any of these numbers, maybe you didn't watch last week when we talked about the hidden cost of guessing these numbers, but let's move forward and we'll get into that a little bit more. So step two, you want to project September through December realistically. Be honest about what the next 4 months actually look like. Now, what we do here, honestly, is you see a trend over an 8-month period. That's why I consider quarter three and especially the fourth quarter payment is due after the end of the year when you actually know how you did. So this one and the fourth quarter, I consider the two most important because you have more actual data to work with. If you can extrapolate better what the next 4 months will be like if you already have 8 months of information. They are going to have their ups and their downs. The insurance companies dragging their feet on your claims receivables, that kind of thing, may have created some outlier down months as well as a couple of really great months. So it is possible by the third quarter to basically multiply by a factor of 1.5. But you also want to take into consideration, let's say, for example, that you're dealing with infectious disease and the common cold, the COVID, whatever, it's possible that the winter months are actually more lucrative for you in gross revenue terms. So you want to take that into account as well. Okay. Uh, and as it says here, don't project on just your best or your worst month. Outliers don't do you any good. You basically need a good solid average. And in fact, if your outliers are ridiculous, you might want to throw your high and your low out. Use realistic expectations based on your practice's actual performance patterns. There's no substitute for solid math, and there really isn't. So, nope, I'm sorry. I went a little too far. Now, step 3, and here's the important part, is you want to apply the current tax rates to real numbers. So, once you have an idea of what the rest of your year will be, an estimate, then you basically strike an average. Excuse me, not an average, but you go to any one of a number of sources to estimate the taxes on that amount, and then divide that. Well, for next step is to subtract any payments that you might have made in April and June. And I hope you've been making payments, especially if you've been doing well. So the remainder will be your outstanding tax. You just divide that by 2, since there is a fourth quarter estimated tax period deadline, and that should give you your number. So you want to look at, of course, the income tax rates, and the better you do, the more you pay. We have what's known as a progressive tax in this country. The people with more ability to pay, that's the theory anyway. It seems to only affect the middle to upper middle class. The uber rich seem to have things they can do about high taxes, but we don't talk politics on this show, so let's go ahead and move forward. If you are, in fact, not taking advantage of the S corporation tax election yet, then you do need to figure your FICA tax as well. In any event, even if you are an S corporation, you should be taking a wage because technically you're supposed to pay yourself a wage before you receive distributions. Either way, you do want to self-employment tax equals Medicare plus Social Security. And one way or another, you're paying into it. So you need to figure that. I've got Colorado 4.4% written up here simply because my practice is here and so are half of my clients. We do work nationwide, but of course, since I'm in the Colorado Springs Pikes Peak area, we have people here as well as Denver. And the state income tax is at 4.4%. And I will add real quick here that the Tabor refund for state tax is probably not going to be as generous as it was the previous year. So you can't go too wrong by calculating your state income tax by the 4.4% and leave it at that. Okay. And if you are, in fact, taking a high enough wage, there is a point at which you're paying 0.9% additional Medicare tax. So make sure you have that into your calculations as well. So warning signs: you need professional help. If you've made significant equipment purchases, I've been talking a little bit about depreciation. You may not want to take an entire 100% depreciation. Particularly if your business is scaling, you may want to stretch that depreciation period out for 5 years and take some of that expense, reducing your tax in future years when you're going to need it more. So just because you can do a thing doesn't necessarily mean it's a good idea. Okay. And your practice structure has changed. That's probably going to throw a monkey wrench in your gears if you're not familiar with what to do about that. I mentioned LLC. I don't know why I wrote that there. Honestly, you should be some kind of limited liability entity in any case, especially in the medical field. So that goes without saying. You may have to be a professional liability company. It depends on your state. So S corporation, we talked about that a little bit. There are thousands of dollars in savings available to you if you do that right. So if you are thinking about structuring your practice differently or already have, you may need some help. Multiple income streams outside of your practice. I know a lot of my people are serious about putting money into things such as real estate investment because, like Will Rogers said, it's the one thing they're not making more of. So real estate is a very viable and actually a laudatory um, investment because there are intangible expenses you can write off in that. It has its own depreciation, which is an intangible expense you get to write off every year without an actual cash outlay. Real estate is a fantastic investment, but also it creates more income. We need to know about it. Um, See, I haven't mentioned this here, but another multiple income stream is if you're married, if your husband or wife works, we definitely need to know about that too. So if you're behind on bookkeeping or expense tracking, that goes without saying. You don't know what play to call if you don't know your scoreboard. I'm going to leave that at that. That's almost no duh there. So last year's tax return was complicated or still requires amendments. That's another thing. So um, all this is to say that if you need help, you've got several days left. There are 3 different media that we're coming to you live on here, or you might be watching this in replay. Of course, LinkedIn and YouTube, as well as Facebook. And all 3 of those have in common a comments capability. Write help or more information or call me or whatever you like, or you can just write Eric at owingsllc.com. That's my email address. Go to owingsllc.com and you can also hit the contact us link from there and take a look at our website a little bit. My wife's picture is on there. So with that, there's several days left. Making a good estimated tax payment. Got into the reasons why last week, and I'm going to say it one last time to close on this. If you do not make estimated tax payments during the year and you're going to owe over $1,000 in tax, you're going to pay additional money and underpayment penalties if you ignore this imperative. And it is an imperative. They're not standing over you with a cattle prod or a bullwhip and making you do it. What they're going to do is they're going to punish you in your wallet next year if you don't. So make the payments. Please reach out if we can help you in any way at all. And other than that, I hope you have an amazing rest of the day and you're looking forward to fall coming. Just a little under 2 weeks to go here. Love this time of year. So with that, have an amazing rest of the day and week. And if you have a chance today, do something randomly kind for a stranger. So with that, so long, and we will see you next week.